Hi everyone, good afternoon. I am Natalie Peña. I'm the Global Water Security Advisor for Mercy Corp. And we are really happy to welcome you to this session, co-hosted by Mercy Corp, Hilton Foundation, and Ecopsys, and with the collaboration also with Maple Consultant, Aqua for All, the Stone Family Foundation, and Uduma. So welcome everyone to this practical policy option for private sector participation in water services conversation. And I am happy to introduce you to Kia Riedel, who is the program manager in the Hilton Foundation.
Good afternoon, everyone. Thank you, Natalie, for the introduction. Great. So I want to first provide a quick introduction to the topic. We know that there are persistent water coverage gaps and that low and middle income countries, especially those affected by fragility and conflict, face significant challenges in providing quality water services at scale. Factors that contribute to these coverage gaps include a lack of capital for expanding infrastructure, especially to reach vulnerable and remote areas, tariffs set below cost recovery levels, and limited capacity to manage water services effectively. The private sector holds potential to contribute capital and expertise to enhance water service delivery. Direct collaborations between the public and private sectors have emerged as a method to address some of the challenges I just mentioned. However, public-private partnerships require careful structuring and a supportive macroeconomic regulatory and policy environment for success. In this session, we will unpack the challenges surrounding the provision of quality water services in low and middle income countries and explore practical macroeconomic policy and regulatory options to help equip the public sector to collaborate effectively with the private sector to close these water coverage gaps. In this session, we hope to generate recommendations to catalyze transformative changes in water service delivery and foster long-term collaboration and commitment between public, private, and development partners to create an environment that empowers local private actors aligned with SDG 6. So next, I'd like to present the agenda. So first, we'll have some country case studies. So this session will begin with an overview of experiences in engaging the private sector in Cambodia, Ethiopia, and Ghana. Then we'll have a panel discussion on strategies and insights of public-private collaboration in water service delivery. And finally, we'll wrap up with an interactive dialogue where the audience will be invited to ask questions of our panelists. And so before I move on, I want to quickly introduce the conveners and panelists that you will hear from in the session. I think Natalie already mentioned most of them, but we also have the government of Ethiopia, specifically the Ministry of Water and Energy, the government of Ghana, represented by the Community Water and Sanitation Agency, Mercy Corps, Ecopsys, Maple Consult, Uduma, the Stone Family Foundation, the Conrad and Hilton Foundation, and Aqua for All. So finally, before we move on to the presentation, we have an interactive Mentimeter activity for those of you in the room, as well as for those of you participating online. So I'm sure you're probably experts at this by now. So please join this activity by scanning the code and filling out the survey. Oh, was anybody still waiting? Sorry. Oh. Oh, no. Let's see. There we go. Yeah. Great. Is there still one more question, or should we skip the Mentimeter? Great. Yeah, thank you very much for participating in that quick activity. And I feel like I kind of already spoiled it by skipping forward too much, but we're going to move on to the presentations. And first up is Tom Chaplin from the Stone Family Foundation, who will share experiences from Cambodia.
Slide-wise. Just the big one. Good afternoon, everyone. So I'll share our experience in Cambodia with trying to get the private sector to increase access there. It sounds like we don't have that much Asian representation, but I'll go through it fairly quickly. I mean, in Cambodia, it's a fairly unique situation where you have essentially licensed operators delivering services in rural areas with 20-year licenses, with certainty over the ownership of assets, with a tariff that makes sense. But then you've got 400 license areas which need to be filled with systems and networks and entrepreneurs to deliver them. This is one of our entrepreneurs. But they struggle to access capital. The 20-year licenses only came in the last 5 years. There are high upfront capex costs. The availability of local capital is ill-suited to what they need. And they don't have a track record of delivering services. And also at the 400 license size, they don't have the scale to attract larger non-bank funding at that stage. And so what we did is we set up a facility for providing the right type of flexible financing to operators with longer loan tenors, still some collateral requirements, but much lower. A competitive interest rate, not far below the market interest rate, but just over a longer period of time. And we've been pretty successful. We've lent to 30 operators. We have 37 loans. We're ahead of forecast on all of our repayments, number of connections, volumes of water sold. And it's kind of a model for how it could work. I mean, it's not just, we don't just provide financing. The real bit here that makes it work is the fact that you provide technical support. So we don't make any money on this facility, which shows the level of effort required to get this thing off the ground and to provide the coaching support, et cetera, required. But, on the face of it, as a financing facility, it's going well. We last year raised 4 million from Bridges to expand it, which shows how through consolidating and professionalizing the sector, you can then start to raise larger tickets for PWOs. And it's also a model that we see can work elsewhere. However, having said that, I think we could, as a funder, we could pat ourselves on the back and say, well, it's successful. Look at all these metrics that are doing pretty well. And I think that would be a mistake. It's not very much. There's still a massive opportunity to go after. The number of other funders operating in the same space has been fairly inefficient in terms of how they also fund operators. And the operators are entrepreneurs who don't come from the water sector. Their incentives, without the presence of a regulator to enforce the standards which they signed up to in their licenses, means they don't actually necessarily meet the service quality requirements and coverage that we all want as impact funders. And therefore, it's important to look beyond the financing component of this and see, does the financing really have the maximum impact that we want it to have? Is it delivering the outcomes that we want? And I'd argue that it doesn't at the moment. Yes, it's a good model, but we need better collaboration with other funders to make sure the allocation of funding is efficient. We need better capacity and enforcement from the regulator to make sure they actually live up to what they promise to in their license areas. And capacity building is still a massive gap in the sector in terms of the technical support required. So I think with the premise of the session, it's saying we need to think beyond that, and then when we're designing these financing facilities, the service level and coverage that we're going after has to be embedded in the design of that facility. And the technical assistance is always underestimated, and we need to build that capacity as well. So that's a brief summary, but we can discuss more in the session. Sorry?
Well, thank you. Now we are happy to show you another case we have in Mercy Corps. We are assessing a new project in Ethiopia. Unfortunately, our team lead couldn't come here, but he has recorded his presentation, so happy that
Hello,
you can have.
I'm Andreas Shobio. I'm RISE Project Team Lead at Mercy Corps Ethiopia, and today I'll talk about the RISE project, which is a research for innovative and sustainable water in Ethiopia. Access to water is still a challenge in Ethiopia. Only 70% of the total population has access to basic water, and making this challenge even more difficult, public source is only able to commit $3.7 billion out of $13.9 billion needed for universal coverage, which means the public funding alone is not enough to cover the water access gap in Ethiopia. So there is a clear role for the private sector to bridge this financial gap, as well as providing access to water, especially with a PPP arrangement. So there are recent reforms which can allow PPP to bridge the financial gap in Ethiopia. There are three buckets of big opportunities. The first one is supportive policy framework. With this supportive policy framework, Ethiopia is actually creating conducive environment for the private investment by creating, a dedicated PPP framework, as well as, establishing PPP unit at a federal level. And second, there are ongoing regulatory reforms which make the Ethiopian country as a country attractive for the private investment by enhancing, transparency, avoiding bureaucracy, and protecting the investors' right. So this makes actually Ethiopia attractive for the private investment. And the third one is the macroeconomic reform, which is a recent one, the floating Ethiopian birr, and establishing more realistic exchange rate, which has actually potential to increase or boosting, the foreign direct investment, as well as attract, international financiers, as well as credit market. So using this opportunity, Mercy Corps and Hilton Foundation are supporting PPP development in Ethiopia with RISE project, and the objective is to identify and screen potential PPPs to expand access to water in Amhara and develop strategies to engage the domestic private sector. So the project is at Amhara region, 3 districts, Darafat and North Meja. The first phase started at January, and it will run for the coming 17 months. The donor is Hilton Foundation. One important point here, most of the PPP projects implemented in Ethiopia are large-scale transactions and out of the water sector for the other sectors, as well as managed by at the federal level. So with this project, we are aiming or we are targeting for small to medium-sized projects for the water sector, as well as the management and the structure would be at a regional level by helping to fill and fill the capacity gap. So to effectively identify PP projects, we use actually standardized screening process. So there are 4 stages. The first one is inception phase, and which is startup activities. The second one is sector studies and potential PPP project shortlisting. We selected 3 projects based on project screening and prioritization methodology, and comprehensive viability studies conducted around 5 studies, technical feasibility study for the selected 3 districts, water demand forecast, and policy regulatory review. These 3 assessments are already done, and partner capacity committee assessment plus financial risk and economic analysis are remaining. So this all process leads us to finding a conclusion, which is actually optimal PPP model recommendation plus PPP toolkit. So from the completed assessments, emerging findings indicates a greater need for regional level PPP support. From the screening process, we reviewed 80 potential projects and we identified that many are too small and lacks revenue potential. So we proposed, clustering projects in its geographic area. So we identified 3 cluster projects and we did actually a technical feasibility study. And we also did a market assessment, and based on that market assessment, willingness to pay for improved services exists, but full financial analysis spending and subsidies will likely to be needed for initial cost recovery. The other assessment is policy, regulatory, and capacity review. Supportive. There is a supportive enabling environment at the federal level, but we identified that limited local level capacity structure and management. So detailed assessment plan to be conducted in the coming months to identify this. So the next steps. The first one is finishing existing feasibility studies, which is actually financial and economic analysis and capacity assessment. Second one is developing PPP tools, which is actually for identification and screening tools, building awareness for possible PPP models, and developing guide on PPP implementation steps and capacity package needed to manage PPPs, and promoting small scale PPPs for the water sector. Thank you for your attention. I'm happy to have your questions and comments.
Okay, thank you. And now we are going to share experience in Ghana. I'm happy to introduce you to Berta Dare, who is associate in Maple Consult. So welcome, Berta.
Thank you very much, and good day to everyone. I'm pleased to present some initial findings from this study that is exploring the opportunities for PPP in the rural water and small town sector in Ghana. So it's a joint collaboration between ECOPSIS and Maple Consult, and I'm just one of the team members representing the group. Okay. So this study is intended to support the Ministry of Water Resources, Works and Housing of Ghana to understand a bit more what kind of support will be needed to move the idea of PPPs forward, because in the new water policy, this is one of the issues that has been adopted, that we would apply PPP solutions to reach more people in the rural water. And so this one is just a background information. The study is being supported by the Hilton Foundation, and is being carried out by Maple and ECOPSIS, as I said. And we are carrying out the study in 3 phases. The first one is a feasibility study. The second one is an initial institutional diagnostic. And then the third one would engage with the private sector to understand what needs they have. Okay. So just to also give a bit of clarification, there's a whole scope of PPP ranging from design and build all the way to build, own, operate, and transfer. And we are looking at the right side of the graph, more around design, build, and operate, or concession, or build, operate, and transfer. Now, the question we would ask is, why is it important for us to have this strong focus on PPPs in rural areas? And from our population census that was done a couple of years back, the rural population that has to be served is almost about 17 million people. And the current coverage figures provided by the National Community Water puts the people reach around 63. So we are talking 63%, sorry. So we are talking about 4.8 million people without access to what you call just basic. In fact, most of our coverage, if you look at, I don't know if any of you were in the other sessions on the SDGs, you see that our coverage for safely managed is very low. So most of the coverage is just basic services. And even for the just basic, we still have another 4.8 million that do not have access. And we also see that in rural areas, most people do not have water piped to their premises. They have to walk far, 30 minutes is the standard to walk and go and fetch water and come. And we also know that if we want to improve the services, improve reach, also get the water closer to them, we need a lot of money. And that's almost about 50 to 60 million US dollars a year. And governments will not be able to raise this kind of money. It's also important because if you look at the graph behind me, you can see that when we did our national infrastructure plan, you could see that we need to expand more. We need to reduce those who have access to just point sources where they have to walk to and have more people getting access to pipe systems coming to them. And so in the right side, you will see that the blue, which is representing the point sources, will be reducing, and the green, which is representing the small town or the small urban systems, would be increasing as we move on with our infrastructure plan. And so we would need a lot of investment to support delivery of these services. So how is this going to be done? So for our study, one of the things we did was to look at the policy environment. And like I mentioned, we just recently launched our national water policy. We had a first one in 2007, and we recently revised it, and it was launched just, was it a month, July? Yeah, in July 2024. And there's a clear commitment from government that everyone should have safely managed access to safely managed water. And there's also a clear commitment that because governments will not be able to bridge the funding gap, we need to have the private sector to actively participate. So I saw from the Tom's presentation that in Cambodia, for example, you have 20-year license and you have a good tariff. Tariff is a very important thing that we've been discussing. And you have a good tariff to encourage the private sector. So how does it look like, for example, in Ghana? We have several organizations. The lead is the Community Water and Sanitation, which was set up purposefully for rural water and sanitation. And it is undergoing some transformation to move away from being just a facilitator towards a more active operator of water systems. Then we have our communities. So we have what we call community-owned ownership and managed systems. Then we have the district assemblies or local governments, and we have the Ghana Water, which usually gets into peri-urban water supply. But we also have what we call small water enterprises and NGOs who are bridging the gap between what the government cannot provide and what the people need. So we have a few of them, like Safe Water, who are also supplying water to communities. The only challenge, though, is that the service areas are not well defined. So sometimes, if you make an investment in an area, within a certain time, maybe Ghana Water, which is the mandated national water company for urban, may move into that space because your space is not well defined. Or someone else might take over because your space is not well defined. So we need to look at what these things will do. And it poses a big risk because if you've made an investment, you can get it back in 20 years. And in 5 years, your system is taken over. Then you have a challenge with making sure that you can get private people to come and make those kind of investments. Unfortunately, there isn't also a lot of data on existing PPP arrangements or PSP arrangements that exist. And there's also limited regulation. So even though the Public Utility Regulatory Commission is mandated to regulate the whole sector, you realize that only urban water is being regulated properly in terms of defining service performance, also having a formula for utility that keeps changing. So sometimes the small water enterprises would align, or even CWSA will try to align their tariffs to the urban water. But where you don't have a strategic tariff regime, it becomes a disincentive for the private sector, because then the tariff ranges may be very different. Maybe governments will charge very low, but your real cost is very high and you have to recover it. So we need to find a way to bridge this gap. So these are some of the things that are coming out of the initial study. We also have the new PPP Act, which in itself is very good, because then it is encouraging what we seek to do, and it's provided a good framework to guide how PPP may be done in the different sectors. And so you as water would pick this document and fine-tune it to you, and there's a clear process with institutional arrangements and the kind of steps that you need to require. So while it's a good opportunity, maybe on the other side, it may also be a bit of a risk, because where you have an unsolicited proposal, you, the private sector, you are not entitled to any tax exemptions or maybe viability gap funding. There's a space to have viability gap facility for proposals that are solicited. But even that one, you will not go beyond 30%. If you have to go beyond 30%, there are a lot of things you would have to follow to get beyond that. But even then, there's also a second cap that no matter what, it should not go beyond 50%. So these are some of the elements that you see. But the process itself is also quite cumbersome. And yesterday, we were even talking to one of the people that are involved in the process, and he mentioned that the ministry would even charge you a percentage for the initial work, preparatory work that is done towards getting the PPP done. So these are all things that make it a bit cumbersome. And sometimes when you have foreign partners, you would have to get approval from Parliament in order to do this. So these are some of the initial findings that we have found. But also, moving away from the institutional framework to what is actually happening on the ground in terms of pipe systems, what have we seen so far? Well, this one, I guess this one is a bit more predictable, that the pipe water systems are more profitable for the rural systems, and the tariffs that are currently being charged may not be sufficient to cover the cost of operations. And so it makes it very difficult to make a good, to break even or even make a profit. So that is something that needs to be dealt with. Also, the more you have household connections, the more you have revenue. Unfortunately, the current structure makes it such that household connections are limited. And so moving forward, we will have to consider how to increase household connections. And then production cost for water is very high. And so the question will be, how do you bring in more small towns together, have one production, have more connections, and then you'd be able to benefit from the economics of scale. And then perhaps more importantly, a blend of both private and public funds will be required to make investments over time. So very quickly, just so that I don't spend a lot of time, I think we are moving on to the next stage of the study, and we would perform some detailed feasibility in 3 selected districts. And then we would also engage with specific private sectors to understand what is happening with their work. And then, following this, we'll make some recommendations to government on contract modalities and the risks. And we'll also look at how the work we are doing will fit into the current broader sector reforms that are being done by Ghana. So I'll leave it here. And then I'm sure during the discussion, we have someone from government who will speak more to some of the issues in case we have a lot of questions. Thank you very much. Okay.
Well, thank you, Berta. And now we are passing to the second part of our session. We are going to have a conversation about these practical policy options for engaging private sector in water services. And then I'm happy to introduce you, Gufran Mansour, Director at ECOPSIS.
Thank you so much, Natalie. Thank you, everybody, for being here. It's 4 o'clock. Everybody's falling asleep almost. Well done. We are doing it. So this presentation just gave you a background of the situations in these countries, but also some solutions, tentative solutions. And I'm very privileged to be part of a team trying to find a solution, on how to attract the private sector. And here I would like to say, without, doing publicity for unnecessary publicity, but I'd like to thank the Hilton Foundation for supporting these kind of studies that are very risky. Because when we embarked in this feasibility study, which Bertha shared some highlights with you, we told the foundation, it's a feasibility study on private sector participation in the water sector, but the chances that we find that it is feasible are very low, because we know the situation, we know the risks, but at least we want to inform government on, okay, this is your pathway, this is your policy for private sector participation, what is it that you still need to put in place to get there? So at the start of the study, we are not very hopeful that we will achieve much in terms of, for example, a deal happening between any investor and a government representative, whether it's CWSA, the authority, or local government. But at least we know the pathway to get there. And I'm hoping that through the panel conversation we will have here today, we will get more insights about what is it in practice that we need to think about in our sector for making private sector possible and happening. Because as we hear, all governments have private sector in their policies. You look at the numbers, you look at the financing gap, you look at the regulatory arrangement, you think, how are we going to achieve this? So everybody has that in their policy, but in practice, what needs to happen? So this is why we have a panel to discuss this issue with you, representing different stakeholders in the water sector. But I think before we invite the panel, we have to introduce you. We have another Mentimeter, you say, activity. So the Mentimeter, is it like that? Or so the question doesn't show, but if you go to your Mentimeter, I think the first question is, what is your experience with private sector participation? Have you worked with any specific model of private sector participation in the sector? And what is that model? I think that's the first question. What are the challenges of private sector participation? Who is moving the slide? Okay, policies, viable and experienced private sector. I think that's an interesting one, so maybe we can discuss that more. But only 4, 10, 12 people have responded to this question. Why? Oh, so let's go back to the Mentimeter then. Yeah, let's do that. Can we go back to the? No, not that. We're getting there. Okay. Yeah, good. Is internet so slow? Oh, okay. It's fine. So I think the first question was, what are the main challenges or barriers to private sector participation? Yes, next. No, we're too fast. Good. A bit more responses, okay. No, that's the models. The one before. Policies and regulations. Interesting. Okay. Fortunately, we have two government representatives, so maybe they can enlighten us a bit more about how to address this issue. And the other two ones are incentives. I think this also relates to the viability of our sector financially. In terms of models that you have been engaged with, we see O&M, management contracts, which is quite similar, I think, to O&M contracts, and performance-based contracts. Some have experience with concession agreements. I would be very happy to hear about those who have experience with concession agreements in the water sector. It would be interesting. Okay, so with this in mind, I'd like to invite the panelists to come forward, if that's okay. How do we move on? Yeah. So first of all, I'd like to have you here, please, the panelists. Tom, Priscilla, Mr. Ibrahim. We are missing, Thierry Barbot is also here from Uduma. Okay, so just to say that you saw some presentations earlier. If you had any questions, please keep them and we can address them following the panel, or as we also ask the panel some questions. So I'd like to introduce just two words of introductions. So Mr. Abera Ndesho Abebe is online, correct? So he represents the government of Ethiopia. He's a senior advisor to the Ministry of Water in Ethiopia. Ethiopia is a country where 38% of the population does not have access to at least basic water services, and in rural areas, 56%. So I think I can't get used to these numbers. So 56% of the population in Ethiopia doesn't have access to at least basic water services. So I hope Mr. Abera Abebe can tell us a bit more during the conversation about what is the government policy then for addressing this, especially if the private sector is part of the solution. I will also introduce the other government representatives from Ghana, Mr. Mohamed Ibrahim Adoko, Director of Community Water and Sanitation Agency, which is one of the leading agencies in the water sector in Ghana, having been very involved in the development of infrastructure in the past 2 decades. Mr. Adoko is Head of Planning and Investments at Community Water and Sanitation, and who is also mandated specifically to look at rural and small town areas. In the panel, I'd like to also introduce Madame Priscilla Smith from Aqua for All. Aqua for All is a foundation, and Priscilla Smith is a Senior Impact Finance Manager at Aqua for All. As a foundation, Aqua for All supports WASH SMEs, so private enterprises, via grants, technical assistance, but also by linking them with other financial institutions. We are lucky because we have a representative from service providers, so the private sector, Mr. Thierry Barbot from Uduma. He's a director of Uduma since 2016 and the CEO of Vernier Hydro. And the story is that Mr. Barbot established Uduma after realizing that there was a big issue with operations and maintenance of water infrastructure. And Uduma currently serves 1.5 million people across several countries in Africa in contracts with government. So I think lots of lessons to learn there from Thierry Barbot. We also have Mr. Tom Chaplin from the Stone Family Foundation. So no big introduction. Tom made a nice presentation. So he's the WASH Managing Director of the Stone Family Foundation. The foundation is a small foundation, but has quite a lot of impact, as you could see from his presentation, on finding innovative ways to include the private sector in our sector. So I think it would be very, again, interesting to hear your experience. So, first questions to those who have come very far, so from Ghana, but also from Ethiopia. And well done for you, Mr. Adoko, for being with us. I noticed actually at this conference there aren't many government representatives. So I think we're very privileged to have you with us today. The first question to you is, what is the place of the private sector in your country policy for extending water services? Actually, because you come from very far, I have 2 questions for you. So what is the place of the private sector? I put this question to you first, and then I will allow our representative from Ethiopia also to answer this question.
Thank you very much, Gufran, and good afternoon, everyone. I think Beta and our friend from Ethiopia have provided a context for why the private sector is very much needed, in the rural water and small towns space. I think it's all about the coverage gap that exists as we speak. Beta mentioned that we've achieved 63% coverage, per our database. And in Ghana, the rural water and small towns sector or subsector is supposed to provide water to about 17 million people. So if you do 63% out of 17 million, that's about 6 million people who do not have access to water as we speak. The National Housing and Population Census puts a figure at 74, which is higher than the CWSA database figure. But even if you want to consider that one, it means that 26% of the people still do not have access to water. And even for those who have access, the infrastructure we've provided that is providing access, to rural communities and small towns, a number of them are not able to provide optimal services. Some have broken down. Some provide water to just about a quarter of the population in the town. And so we need resources to expand the water services to almost everybody in the town. And that is not there. A number of the water systems do not have basic installations that are supposed to help in efficient water system management. And ideally, you will expect that government will be able to, fund the coverage gap, the gap that exists between those who have and those who do not have. And we all understand that the kind of situation that Ghana finds itself in now, it is difficult, if not impossible, for government to be able to fund, the construction of water systems for the remaining population that do not have access as we speak. Per the GWASH, the Ghana WASH Development Program, the rural water and small town subsector needs about 65 million annually, to be able to close the gap. And it is just impossible for government to be able to raise the resources. A decade ago, Ghana was declared a middle-income country, and a number of donors who were providing grants for the rural and small town sector, left the sector in Ghana. And then recently, government is also, Ghana is hit with a number of economic challenges that has blocked our access to the capital market. So government cannot raise even credits or loans for the development of infrastructure in the water sector. So the only place you can turn to realistically is private capital, and people who are interested in investing in rural communities and small towns. And so the private sector is very, very much needed, at this time of Ghana's existence, to help government to be able to close the gap. And a number of legislations have been put in place by government to help to encourage the private sector to come into the space, to help us to develop the infrastructure to serve the number of people who have not been served yet.
Thank you. Thank you very much, Mr. Adoko. Maybe we'll also ask the same question to the advisor to the Minister of Water in Ethiopia. So what is the place currently of the private sector? Is this still on the table, considering all the challenges we already heard about our sector? Is there a sound issue? Just wait, because we cannot hear you. The unforeseen event. Bon. Okay, so maybe in the meantime, Mr. Adoko, can you tell us a little bit more about, okay, this is part of your policy, this is the part of the realities of your water sector, but in practice, what is your role as a government to make it happen? Because we are still far from there. What are your recommendations? I mean, what's on your to-do list for making private sector a reality in the water sector in Ghana? I mean, I say this, but I know there are some small-scale private sector enterprises operating in Ghana, but how can we move to scale really?
Thank you very much. I think government is expected to provide the legislative, policy and regulatory environment, to enable the private sector to operate quite comfortably and efficiently. As we speak, in 2020, Government of Ghana passed the PPP Act 1039, which is supposed to guide how PPP projects are developed in Ghana. We also have the Public Investment Management Regulations, LI 2411. So the two legislations put together provide, the environment within which the private sector is supposed to operate. So the PPP Act, for instance, talks about so many types of arrangements for the private sector, the BOO, build, operate, and own, like what Save Water Network is doing in Ghana. Then we have the BOTs, the Boost, and so on and so forth. So all these arrangements are there for the private sector to, engage in. I think that apart from providing the legislative and the policy and regulatory environment, it's also important for government to think about providing some level of comfort, some level of assurance, and certainty to private people who invest, in putting up infrastructure. As Betty rightly said, we currently, even though we have the legislation at the higher level on the ground, we don't really have defined, spaces where private sector people can provide the service.
You mean service areas? Defined service areas? Defined
service areas. Yeah. So a number of private people or private firms that I've interacted with always express that kind of fear. And the fear is that you provide the infrastructure, and maybe within 5 years or within 6 years, CWSA or Ghana Water comes to invade the space that you have provided the service. And then they may not ask you to pack and leave, but they may take a large chunk of your customers. And so your business model and the kind of projections you made based on the population will be distorted. So that is one area that we have to clearly define and give some level of assurance to private actors who want to invest in the sector. And then there's also the issue of tariff. For a long time, water has been seen as a social good, not as economic good in Ghana. And so the thing is that let everybody give some of the water to all the people, and not just a few of the people. So affordability has always been a very big issue when, tariff setting comes on board.
Any additional point, Then, because we have to give also the floor to others.
Yeah, so the tariff is very important, to assure investors that if they invest, they'll be able to recoup their investment.
But we agree that at the moment, the issue of tariff, for example, in Ghana is not addressed. Like people talk about that we need to address it, but it's just in the to-do list of things to address. Yeah, we're still a bit far.
Yeah.
Any additional point, Mr. Doko, or we can, any third point you want to highlight? No? Good? Yeah.
Yeah, so I think I've talked about legislation, I've talked about the tariff, and then most importantly, defining service areas for
thank you very much.
Private sector operators.
Great, thank you. I'm sure there are other issues. Maybe Mr. Abebe can raise them. But first of all, Mr. Abebe, just a quick overview of the place of the private sector in your policy as a government in Ethiopia.
Yeah, thank you very much, Mr. Moderator, for inviting us to share our experience in Ethiopia. Very briefly, I think my colleague from Ghana has already addressed many of the questions. Just from our end, I think Ethiopia being, the second, largest populous country in Africa, holding a total of close to 120 million, fellow citizens, had the very potential of investment opportunities for the private sector. I think usually if we are, supposed to be, optimist, the number of population are an opportunity for development opportunities to happen. And as if as a service, demand is increasing, and the wash need in the people is increasing. So just coming to your question, just when we look into, we as a Ministry of Water and Energy at the federal government, central government level, in the previous policy statements, the private sector had no, a space for any possible, funding opportunities or investment opportunities for various reasons, which, now is not the time to mention, them. But as we know, we, fully understand that this, climate change effect and the urbanization, the fast-growing urbanization, urban development, and people migration from rural to urban, and the population increase, and the service facilities, and the standard of people. When the standard of people is increasing, it's definitely true that the service demand is increasing. So the government has the responsibility to respond to the wash needs of the fellow citizens in its respective country. So in that regard, as we are currently facing the climate change effect, whereby Ethiopia is a good showcase of those droughts in the one extreme and the flood in the other extreme. I think the public financing, as Andreas tried to present it earlier, the public finance by itself is not going to afford the cost of investment for addressing the wash needs of the people of Ethiopia, both in rural and urban settings. So in earlier policy instruments, we had no enough space for the private sector. What we have only is water bottling companies. We have hundreds of water bottling companies in Ethiopia where they are bottling water and supplying it for the urban people. But majority of our communities, close to 80% of the total population, is living in the rural countryside. So they have the fundamental basic human right to have access for potable, safe drinking water access. So I think government is responsible. In that regard, the available public finance by itself is not enough. So what we did is some 2-3 years before, we have made a policy reform. Following the national reform, we have made a policy reform and providing a good space for private sector to come in and invest in the sector, including the point which was mentioned earlier. We have also a good Directorate General in the Ministry of Finance who is taking care of the PPP approach. So the PPP approach is working also in the water sector, especially in the water supply sector. So we are starting and initiating and encouraging for the private sector to come in and invest. But one of the very fundamental points that I want to raise in this panel is that, the tariff issues. In terms of tariffs, in Ethiopia, we are, considering two policy, instruments. One is ability, and the second is willingness. So ability and willingness to pay is the very fundamental, principles for setting tariff, both in rural and urban. Of course, in our water policy level, in the rural community, the policy says the community has to pay for the operation and maintenance, cost of the operation of the water supply service delivery system. In the urban settings, it's a full cost recovery principle. So what I'm trying to say is that the private sector, so long as the urban utilities or in the urban settings, the utilities are supposed to pay the full cost of investment. So they are responsible. And the policy clearly states that in the urban settings, there is a full cost recovery principle, and they can invest at least priorly in the urban settings and in the urban community than in the rural communities. And that's why government is holding the room and the room and opportunity for the private sector not to impose an affordable tariff in the rural communities, because of the reasons that citizens do have the right, the basic human fundamental international right, basic human right to have access for water supply. So striking the balance between ability and willingness to pay.
Thank you so much.
When we are talking about this, I think we need to take into account of the fact that water is not only social good, but also economic good. So there is no free lunch. So what comes now is the issue of the need for establishing a very stronger, regulatory body, a regulatory stronger, sound, regulatory body, which will regulate between the private sector and the consumers or the users. So both in rural and urban. So
Can you
that
hear
is
me?
what we are lacking.
Yeah.
But currently we are some 3 days before we have already started to establish a policy, a high-level national consultation workshop about a regulatory body in the water sector. So I think the moment that regulatory body is on board, we will be, diving into bringing the private sector to invest
Thank
in
you
the
so
water
much.
sector.
Thank you so much. I think we hear from government of Ethiopia, but also Ghana, that there is an increased commitment, and private sector is being taken seriously. I think, considering the challenges, considering also that it's a right, right? So at the moment we have huge amounts of people without access to basic water, and we know it's a right. So government are also committed to raise the funds, and they think that the private capital can come in somehow to fill that financing gap. But before we speak to investors and those who support, those who bring, who would like to bring private capital to the sector, I would like to ask Thierry Barbot, who represents the private sector service providers, those who would potentially carry the risk of investments, depending on the contract. What is their experience? Because they are currently serving 1.5 million people through PPP contracts. Without going into the very detail of the contract design, I just wanted to hear from you, what are the recommendations, practical recommendations you can also feedback to government from your experience on the process?
Thank you. First, I think I consider that the government has done its job. So that means we have a regulatory framework, we have an improvement in the business climate, we have regulation of tariffs. Once this is done, the private sector is coming. But we don't have to make, I think we are mixing two things. You have the private operator and the private investor, which are two different things. And if you act as a private operator, you don't invest money, but in fact, you don't invest in the infrastructure, but you invest in your structure to manage all the equipments that you are going to deal with. And you have a contract for 10, 15 years. The first years represents a huge private investment. Right. So this has to be kept in mind. Yeah. And if, in addition to that, you are an investor in the infrastructure, you add another risk, which is the return on investment, specifically on this component that you've paid. And we saw in the different numbers shown in Ethiopia, Ghana, Cambodia, that ODA alone cannot finance. Foundation, family office, whatever cannot finance. So we need private money. How can we attract this private money when we cannot expect somehow any return in the rural water supply sector? And how can we attract private operators if when you take the model right from the start and you are quite objective in your model, you see that during 2, 3, 4 years you will lose money because we will not be able to recover your own investment you made for the structure. And that is this is something which is a key issue for us. And the only component where you can play with is the consumption. Unfortunately, the consumption is unpredictable. Tariffs, you can discuss, calculate whatever you want, which is to be done, but consumption, and according to, is very unpredictable and very sensitive. So if you make a model with 20 liters per capita per day, I can invest in all the countries. 20 liters per capita per day, every model is running. But the reality is 5. I can tell you, I've been in that business since 2008. 5 liters per capita per day is the real consumption that we see in the field. You can do all the willingness to pay study that you want, whatever the result, the reality is 5 liters per capita per day.
In some countries.
In all
Africa
the countries.
mainly.
In all the countries, in rural and small towns area.
Some countries.
You may have some specific areas where they have no other point of water point. So they will consume more. But most of the areas, in many countries, the reality is 5 liters per capita per day. And nobody wants to hear it. But this is the reality, and I insist on that. So based on that, when you make your model with 5 liters per capita per day, I can tell you that it's very difficult to make it viable. So we have to find ways to cover the first losses, during the first years. And that's where I feel we have to change the way we are financing the sector today. We still need subsidies for the capex, but we also need private investment, and to de-risk this private investment, we need some guarantee lines. I call that guarantee lines. I don't know how we should call it, but to cover the potential losses of the first years. If not, no private operator will be able to join on the long term, and we will not be able to change the model, and we have to if we want to reach SDG 6 and more.
Amazing. Thank you so much, Thierry, for these insights. I think that's quite an interesting recommendation, and I'm not going to ask you the follow-on question, Tom, because I will give the floor to Priscilla, but I just want to note that what you talked about is really adapting your financing instrument or model to the realities of the ground, and I think this is something the foundation, the Stone Family Foundation, has done in Cambodia. But we can talk about that, but I like it. I like that but I also note the complete contradiction that you made, that we cannot make money in the water sector, yet we need private investment. So I'm yet to process these kind of things, but we will get there, So Priscilla, you are from Aqua for All. You are a foundation dedicated to supporting WASH SMEs. From your experience, you have joined recently Aqua for All from a different sector, I think. But from your recent experience of working for Aqua for All, what are the challenges you see for local water service providers to access private capital? And what do you do as a foundation to support them doing this?
Yeah, we support SMEs actually from 2 different angles. We support them with grant capital, with technical assistance and capacity building directly, but we also try to support them indirectly through financial institutions, because we want to unlock private capital into the sector, which is, of course, very difficult. We all know, we've heard it several times already. And the risk is perceived very high, so we want to de-risk, among others, by first loss capital, for example, or technical assistance and grants for the financial institutions. And one of the things that we do if a local bank wants to invest in water service providers, we provide training to the bank. We support them in creating this portfolio, and we give them also this first loss guarantee, so to say. So whenever there are losses, we take the first hit. We expect a counter contribution, but at least we reduce the risk for them to invest. And we provide also technical assistance and training, so the bank knows what WASH is, because also that is not always clear. Training for personnel, systems, market analysis, etc. Another challenge that we see is that there is a lack of collateral. The water service providers often don't own the land, don't have collateral, while a financial institution wants to have its loan secured by collateral. So also there, we can again come in with a first loss, so that we provide actually for that collateral, and it becomes possible for the bank to invest in these water service providers. Another thing that we noticed is, of course, also the tariffs. It has been mentioned already many times. We cannot do something about it ourselves directly, but if the water service providers are operating just at a bare minimum level, there is no room for investments, because the cost of finance cannot be absorbed by the water service providers. And then we also have, let me think, we have the collateral and
Maybe in the following discussion you can give us more examples. I think you mentioned a few words, collateral, guarantees, but it would be interesting in the question, and especially if you have those questions here, to give us examples a bit later on, maybe after Tom, specific examples where it has worked really in practice. Have you actually signed? Is this really happening in practice, basically? Yeah.
We do have experience already in some other countries. We are working at the moment on a program in Ethiopia together with the Hilton Foundation.
Okay.
But we do have specifically experience in Kenya, in fact.
Okay.
There we work together with a first bank, the Syrian bank, where initially we were about to provide first loss capital, but it was in the pandemic. So there was no liquidity flowing. Every investor was very careful to invest. So then they asked us to change the first loss actually for a result-based financing, because not only the Syrian bank did not invest in other sectors anymore, so they had liquidity themselves. So we provided a result-based financing mechanism for them to create an incentive for water service providers.
It's like a subsidy mechanism in a way, right? Financial incentives, like a top-up, so they can increase their profit margins.
And to reduce the interest rate from the financial institution.
Okay. Thank you very much, Priscilla. Tom, you also work to support WASH enterprises, water and sanitation enterprises. I don't like to use WASH generally because who's the hygiene here? I know water enterprises, but who's the hygiene enterprise? I'm not sure. But anyway, you support water and sanitation enterprises. You know their challenges. Is there anything else you want to add about what you have seen on the ground in terms of what are the challenges they face, local service providers? And more importantly, what kind of solutions as a foundation you can provide? And can these scale up somehow? Because my understanding these are piecemeal, maybe activities, initiatives, very insightful, so maybe 3 questions in one.
Right. I'll stick with the Cambodia example because I think it's quite a good one that explains this, because to some extent it's almost like a perfect environment where you see what the private sector could do and what it's not doing and what extra help is required. And one of the key problems we haven't really talked about, because the focus is on how do you get the private sector involved rather than how do you deliver the best possible service. And I come from the UK, where the poor regulation of water service providers is incredibly clear. But access to technical services, if you are creating a market, it's a nascent sector, not much experience of delivering water services. They're all entrepreneurs with their own construction and other businesses. They're also entrepreneurs with mostly focusing on profit, which is understandable. And therefore, how do you, A, make sure they're delivering good services, increasing access beyond the easiest 30-40% where it's easiest to increase access to? How do you make sure they're delivering good pressure, a good service that people actually want to connect and pay their bills? And pushing access, for example, beyond 50% requires sales, requires incentives. And that can only be done with more grant funding or incentives from government or mechanisms to do that. And so the lack of the grant funding in Cambodia has destroyed the market for paid-for technical services, which means it's very hard to access technical services, and they're not particularly valued either, unless you're part of a grant-based program. So we're trying to incubate more organic access to technical services. We've got a sales program to try and push how do you work out, how do you increase coverage beyond 50%, because it's shown to be hard in lots of places. And the other thing I'll just mention is there's lots of funding in Cambodia. Has it been allocated well? We've all essentially potentially financed many of the same operators who are the most experienced and understand how to reach us. The ones that are near Phnom Penh know how to access the funding. The funding is still limited in the context of what's required. And therefore, how do we reach the operators in the more rural, hard-to-reach areas who are actually in the need of the concessionary funding and the grant funding? And how do we make sure that's allocated more effectively? Because those are the ones which are harder to reach. To use Thierry's example, like the consumption we see per household in Cambodia is 30 to 40 litres per person, right? So 20 litres he's investing everywhere. This is what shows why Cambodia works so much better. Within our portfolio, I don't know if this would apply everywhere. The consumption is much higher, so it's a much more investable proposition. But analysis by CapRed showed that the whole market as a whole would lose money. The IRR is minus 1%. So going back to your point, you need to make sure that the available grant funding is going to the right places so that the commercial capital and the banks, etc., can really put their funding to work.
Okay, interesting. Yeah.
So I'll stop there for the time being.
No, it's brilliant. So, so basically, just to understand, what you're saying is that your kind of concessional finance should not crowd out commercial finance where it's viable. And in countries like Cambodia, where actually water is a business proposition, your role has to be specifically targeted at a certain segment of the market, because it seems to be there is a water market in Cambodia. Yeah.
Where there is the market for commercial capital, that should definitely be applied. You shouldn't be subsidizing CapRed or the ones who admit the first round of grant funding they gave for operators went probably to the wrong operators because they were trying to work it out as they went along. And so we are trying to play a role to coordinate more directly. We're also actually working with the World Bank to work out what's the perfect version of this in 2 provinces, where you create incentive mechanisms to finance a whole province and making sure the banks are playing exactly where they're supposed to play. And this is what we have to take responsibility for as funders, to make sure that we're doing this responsibly. Because as I said, it'd be very easy for me to pat myself on the back and say, we've got a successful facility, let me tell you all about it. But really, is it delivering what we want? And is it actually scalable? Because 20 million within a 500 million need, which I think is still understating it, doesn't really mean much.
And maybe a quick one, because I know a little bit about that, the project you have in Cambodia, where I think what you propose is a loan which service providers could repay based on seasonal incomes. Is this correct, or is this still happening? Or because this relates to Thierry's point, is that we need to adapt the instrument or the loan or the repayment schedule to the realities. So I'm just wondering if this is still the case.
Yeah, we're a big fan of revenue financing for water.
Revenue financing, you call it.
So that you can essentially increase, as the operator's income increase, you can increase your repayments. It requires you to be patient. We kind of talk about this a lot because within this it's flexible and it's revenue financing. The reality is in Cambodia, because we work through a bank and we're trying to increase on lending through banks for where it can happen. In reality, in Cambodia, it's quite hard to do that. And actually, all the entrepreneurs have existing businesses, so they're repaying their loans not from their water revenues. So although we could say, great, it's revenue royalty, the practice is they're not repaying based on their water revenues. So I do think that is important, especially in places where you're not getting private investment or personal investment. You need more patient and also solutions for non-collateral loans, which is the challenge fund in Kenya with Aqua for All, where within an ecosystem where you can have digital payments, then you can have cash flow based financing. You can actually have different ways of doing it.
Thank you so much. I'd like to invite questions from the audience. I have one here. If there is any question online as well, I don't know if you're monitoring. Thierry, you want to add something? Yes.
Thank you. Just to clarify the thing. I was focusing on Africa. I know Cambodia very well. I know the situation is totally different. I was focusing Africa. And concerning the adaptability of the tools, the financing tools. I mean, if we stick to 15% ROI on 5 years, we will never be able to finance rural water supply sector. Like I say, we cannot. What the situation is today, rural water supply sector is not attractive. So we have to change the tools to make it attractive and expand the duration of the loans and lower the expected ROI. That is and I think our friends from the financing world, which is another world as compared to my world, have to understand that they have to really make the effort to adapt to that. Because if not, one day they will have nothing to finance. The world will simply collapse. So I think it is very important to understand that.
Thank you so much. Maybe we can pass on the mic to,
Okay, my name is June. Thank you so much. That was very interesting. So my question is to Thierry. So you just mentioned the 5 liters per capita per day, which is a good for modeling. But I'm just curious to unpack it a bit. Is this for point systems where you have to go to water points, or is this for piped water to household premises? Because we know that may be different. So just differentiating that so that we can understand that a bit better. Then my second question is to the Honorable Minister from Ghana. My question is, over and above the regulation, is there space for the government to have subsidies? Because Thierry has mentioned that, we have that fast loss issue, and I think that the government is the biggest financier. The water sector has been subsidized globally by governments for us to even move forward, especially in the global north. So in the global south, is this a role that the government is starting to play a bit more seriously, especially for capex investments, but also for now the operational investments, so that the private sector can find it more interesting to start operating some of these systems? So those are my two questions.
Since I have the mic, can I? And I'm not yet a minister. Thanks for your prophecy. So thank you very much. I think for now we don't have a subsidy, for tariff. But for PPP arrangements, you can think about subsidy from another angle. So if you take the solicited proposals that are supposed to come from the contracting authority, so the government agency. If the government agency presents a proposal to government, there's a possibility for viability, gap funding. And that's what Beta mentioned, up to about 50%, So government can support the contracting agency which has presented a proposal, to government for approval together with the private sector organization, So that in a way helps the project in totality, in getting something, some OPM that resources from the project, to do the capex, and that could influence the tariff that the end user will be paying.
Thank you.
But we've not had any example like that before.
It hasn't been implemented
in the books
yet.
For now.
Yeah. Thank you.
Yes, I was mentioning the public standpipe and not the private connection. We see in the field that private connection, there is a higher consumption, but there are other issues, especially the recovery. We are working on it, but 5 liters is for public point.
Yeah, thank you. Is there any other question from the audience?
Thank you. This is Laura with Water Mission. Just a quick question. So earlier there was a question around what are the barriers to the private sector entering, and everybody said policies and regulation. So I'm curious, what is going to change policy and regulation? Is it really private finance coming in and influencing that, or is it really people, like the votes? And so are we in the right place to be advocating for this, or should we actually be campaigning, with
for
people?
policy and regulation?
Yeah, for policy and regulation change. And so just wondering if we're even in the right places to be having these conversations.
Who will answer this question? Our representative from Ethiopia maybe can answer your question. So the question is, should we be campaigning for policy reforms, yeah? For the private sector to come in. The sound. You have to unmute.
Yeah, I don't think, hello, are you hearing?
Yeah.
Yeah, I don't think, the campaigning is, needed now. I think the campaigning by itself and the encouragement has to come from the government policy, makers and decision makers, from the sector ministries itself. Because, as I said earlier, across Africa, we know the money, the resource, the investment, resources in the hands of the private sector. And we know the capacity of the public financing, modalities. So in that case, I think, they don't need to advocate it and come for a campaigning. Yeah. Because, for example, nowadays, as a result of the groundwater depletion, especially in our case as Ethiopians, we are not able to, secure water availability at a very shallow ground level. And we are, obliged to drill deeper and deeper. And deploying, the high techs, not the low techs. We are not able to construct hand-dug wells or spring capping or shallow wells. We are now enforced to construct high techs, very complicated systems. In this case, we don't expect for the user communities or the users to operate or manage. So as my brother earlier said, I think we need to have, private operators, not only the private, investors, but also the private operators. Private operators can come in and ensure, design period of a given project to serve longer for the communities. For example, in Ethiopia, Djibouti has a water supply in the border of Ethiopia, where Djibouti, government has water wells, close to 28 water boreholes in the border of Ethiopia, and they are transporting water for the people of Djibouti around 350 kilometers. And look, it is a Chinese private company who is operating this very complicated investment. The original cost of investment was secured from the Chinese Exim Bank, and it is a Chinese private company who is now currently operating that system on behalf of the Djibouti government. And we strongly encourage for private operators to come in. But the other point, what I want to raise is with the issue of the collateral, guarantees. Yes, we are, for example, in the presence of myself and my minister, we have been discussing with Aqua for All about the private sector investment. But the challenge with us is that we were not able to have, that accountability system. We had an institution, what we call it, the Water Source Development Fund, and utilities have been receiving different types of loans from different financing institutions, including the concessional loans, but they are not able, to pay back. And the ministry was ultimately accountable to pay back for that loan. So that's why we hold, narrower for the window of, opening the whole system for the private sector to come in without having that, accountability system in the sector. Otherwise, we are more than happy, and I think the push has to come from the sector ministries itself instead of the private sector to campaign it.
Thank you very much.
People has the capacity to pay. Even we are affording bottled water, right? A bottle of water.
Mr. Abebe, time is running, so I will cut you. Although I think you raised something very, very, very important. To reach the scale that we are talking about, because so working on this project, working on this feasibility study, the question I have was, do we also need to think differently about who is the private sector? Because we always tend to go to the usual suspect, the small water NGO that has been operating, delivering water, and then we're like, oh, how are we going to make this business sustainable? Oh, we have to build the capacity. But actually, you have business people in country that have other businesses. So you're not local, you're not from Côte d'Ivoire or whatever, but you had your business, which was equipment supplier, and then you turned into an operator. So you have the experience of running a business and managing working capital, etc. So what Mr. Abebe actually has raised is maybe the need to shift to a different kind of, trying to maybe to attract and talk to and engage with different kind of businesses that may be attracted to the water sector, with the caveat that Tom mentioned, that we need to be careful about the service that they need to be delivered and the standards. And I think we have a final question from, that's a very long question. So wait for it. It's 10 lines. So this is Will Tillett from Self-Help Africa. He talks about consumption and the willingness to pay that increases with raising service levels from public taps. So Thierry, to your point that public taps or so household connections may be more attractive from a revenue perspective. The question is, I'd be interested to know the experience of those on the panel and in the room about mechanisms to achieve this upgrade. So how do you convince people to move from fetching water from the public standpipe to the household connection? What is the effort that should be there? And the role of operators, but also government maybe, in that, to upgrade the service levels?
We don't have to make many efforts, because as long as you propose to have water at the house level, a lot of people are happy for that. And in many countries, the connection is subsidized, so it doesn't cost a lot of money. Mm-hmm. So it's more a matter of water resources. Do we have the capacity? Water. And then a cost, how much will the government subsidize in order to lower the cost for the beneficiary? But most of them are willing to have the connection at home. Mm-hmm. This is not the issue. The issue, like I said after, is how to recover the money if you don't put, for instance, a prepayment meter or something like that. Yeah. It becomes a real issue after that.
Thank you. Anyone wants to add anything to this? How do we move from standpipe to... What is your experience, CWSA, as an operator in that? Is it easy to convince people to connect?
Yeah, so as I said, it's more about the capacity of the service provider to supply the water. A number of people want to connect. So it's not about even convincing people. People are even all over you, requesting that you extend water to their homes and all that. In the case of CWSA, the little barrier is the amount of money you need to do the connection. But day in and day out, you have a number of applications. Thank you very much.
So what you're saying, there's strong demand, but it's about funding the initial extension costs, etc. Thank you very much. I think we're going to bring the event to close, but who's closing? Natalie will close. I will thank you so much for attending myself. I know it's late and we're super tired, so well done you, Natalie. And thank you so much, panelists.
Well, as Gufran has said, thank you so much to all of you. First of all, to our panelists and conveners to have participated in this panel. To all of you, this is quite of the, like, we have one day more, and I know today everyone is tired. I am doing some summary of the session. It is evident that we have a big gap for achieving universal water coverage, water service coverage, and it is impossible to achieve universal coverage without the private sector participation and involvement, and how important it is not to see just private sector as like an investor, but also part of that system as also a service provider. Well, we have mentioned, like in the panel, we have had a lot of ideas. We have seen how important it is, first, to assess the enabling conditions to go and make a public and private partnership. First, assess these conditions, but most important, to create that condition. So we have 3 principal sectors that need to be working on the system, which is the public sector with all these policies and guarantee the private sector for making a good investment. We also have the private sector to support the service providers on capacity building, not only just with capital. So how important is to have like a cohesive work between the public and private sector. Legislation, policy frameworks, also have tariff frameworks to guarantee that this private sector is a really good business case. For the private sector, it's a really good business case to invest in service, in water services. So everything we have seen today is so important, but we don't want to stop the conversation here. We want to have, again, a QR code with you to get your final ideas and comments. And one last more, to have the contacts of everyone who was attending this conversation. We want to continue the dialogue here, to continue the work that we are doing to achieve universal water service coverage. So thank you so much to all of you for being here. We are so happy, and let's continue the conversation then.